Well, welcome back. Time now to take a look at Brianne's new top picks. Her first one is ATS Corp, which does automation for, I guess, manufacturing. Brianne, can you explain a little bit more about what they do and what you like about them?
Yeah, so more in kind of the industrial space, as you mentioned, Canadian leader in really custom automation systems for large scale manufacturing. So they do support kind of vaccine production, nuclear energy, and food processing. They have a strong momentum, over 850 million in bookings last quarter. They did have a bit of a backlog that hit a record of over 2 billion. So for us, that does offer a clear revenue visibility of what we can expect going forward. I think the company is refocusing on high value sectors after exiting a troubled EV contract. So their margins are recovering, signaling to us improved operational execution. Their balance sheet's flexibility has allowed them to renew M&A activity. Again, we think the industrial sector is supposed to see about 18% earnings per share growth for 2025. So why we like this sector as a whole. And I think falling interest rates, global stimulus, can boost, infrastructure and manufacturing. So for us, we see about 22% upside in this stock, and it ranks about 8 out of 10 for us.
Got it. Okay, let's get to your next topic, which is Altius Minerals on the TSX ALS. And this is a company that's in mining, but not in mining. They get royalties?
Yes, exactly. And I know we touched briefly on another royalties companies there. But for us, yes, Altius Minerals is a royalty company earning revenue from mining without actually operating mines. So they're not taking on that risk. We like royalty models for really their high margins, their scalability, and their compounding potential. So Altius is well exposed to structural growth sectors like copper, potash, renewables. And I really see it as its mix supports that steady cash flow and upside from global trade trends in sustainability and electrification. So financials are solid, low net debt, generates strong operating cash flow. And I still like the sector. I mean, you've seen a run up, and I think falling interest rates, global stimulus, all of that good. Weaker US dollar will continue to push up that sector. So we have about 24% upside from here and ranks a 9 out of 10 fundamentally for us.
And you see a price, or you have a price target of 33 and change?
Yes, exactly. Our price target's about 33.70, which is where we're getting that upside potential. I mean, the stock returns over the last, 1 month, 3 months, 6 months, and 12 months. The stock's done about 26% year to date, only about 2.8. So again, we still see some room to run at all-time highs, still off the peaks of about 11%.
Got it. Okay, let's go to your last top pick, a well-known name, Salesforce. And it's a company on the New York Stock Exchange is where you like it. Tell me why Salesforce as far as growth here.
Yeah, I mean, Salesforce, big name, most people know, global leader in really that CRM software and kind of the pioneer in the SaaS model. I think they're really evolving into the operating systems for more modern enterprises, far beyond just CRM anymore. They're doing the data cloud, Agentforce, AI powered insights. And I think that is gaining traction for them. They've done 1 billion plus in reoccurring revenue. And a big part of their top deals now includes AI. To me, I think their valuation is still appealing, trading at 22 times forward earnings. So near the low end of its historic range. And again, they're continuing to scale. So they're boosting shareholder returns through buybacks and dividend. For us, we see, a potential upside of about 36%, looking at a price target about $3.52 per share, ranks a 9 out of 10 for us, and still the stock's down about 23% year to date. So again, this is a stock that I think has great value.